Hello, everyone. Thank you for joining us in this meetup for May. Today's meetup is entitled A Random Walk Through DeFi with Ken Chan from Ribbon Finance. For those of you who don't know him, he's actually Malaysian and he's been a member of Ethereum Malaysia since a long time ago. He then left on his adventures, which I'm sure he'll share more about later. Our sponsor for today is Etherscan, which is also another Malaysian company, those of you who might not know. And as usual, we will start with some announcements and monthly roundup. So some major announcements that we want to share. There are some very kind volunteers within the community who've offered to give out crypto duit raya, which is happening next week. And we were kind of inspired by this idea recently by a couple different projects that essentially are paying people to do things. So for this ETL Duit Raya, the details haven't been confirmed yet, but basically what we will be giving out are a list of tasks where it's either, let's say, writing down a simple guide on, let's say, how to set up a MetaMask wallet or how to farm on an AMM. So those kinds of tasks, possibly in English and Malay. And for those of you who do it and do it well, you'll be rewarded with some crypto duit raya. The exact details will be announced soon before Raya. But yeah, so keep an eye out for that. And if you want to share it out to any of your friends, please share it. Like if you're already a big enough whale that you don't need the little bit of duit raya that we can give you, please feel free to share with your friends so that they can learn a bit more about crypto as well. A second thing is there's going to be an NFT art talk on the 9th of May. It was supposed to be in person, but because of the recent MCO stuff, they decided to make it online. They will be giving out a link later, but these are the same guys who have been running an NFT art exhibition, I think somewhere in PJ. And we're looking to, I honestly don't know them too well, but we're looking to find out a bit more about each other, and then maybe eventually in the future we can work on some partnerships or some cool activities together with them. And the third announcement is that since there are a bunch of members of the community who've been very interested in MEV recently, there is this ETH Global event that's happening starting tonight at 11:30 p.m. All the way until like early in the morning in our time. But basically it's about MEV and L2 or MEV and scaling. So if you're interested, you can sort of keep up overnight and watch that. Okay, I'm gonna pass the mic to Aiman to share on some monthly roundups.
So thank you, Harif. So some of the monthly roundup that happened this month is, well, Uniswap VT launch with some new mechanics, and this is actually a screenshot that I took on Twitter about the NFT that you will get that represents your LP position, and it's actually moving, but then it's not in this slide. So it's quite cool. Next is there's a DAO rush week that happened last week, which I did participate because I was looking for some DAOs to join. It has ended, but there are still all the details left, and you could take a look at all the DAOs that participated and maybe see any DAOs that you like, that you want to contribute or just participate in. And then Hari, maybe I let you explain this one.
Okay, so
I'm not familiar with this.
as part of the same ETH Global, there's actually a hackathon going on about scaling. There were a one-day testnet that was done with a total of 7 clients, 3 ETH1 clients, so that would be like your Geth, Parity, Nethermind, and 4 clients from ETH2. So between them, there's 12 different combinations, and they all ran together a testnet that basically prepared for the merge when ETH1 is going to merge into ETH2. It turned out really well. I think they said that soon they'll do a slightly longer testnet, maybe like 7 days. And the word going around is that we are optimistically targeting end of the year or early 2022 for the merge to happen. So this is when proof of work will not be there anymore for Ethereum, and all the sort of, if any one of you are environmentally conscious, can rest well with your conscience that we're not going to be with proof of work.
Thank you, Harim. So next is, so the first real world loan is financed on Maker. So I looked this up. So a proposal was passed on Maker where New Silver Land can mint their own token to be used as one of their collaterals in the MakerDAO block. So I think it's pretty big. Harif, do you want to add on this as well?
No, it's just like because for now all the stuff that you see in DeFi, or at least with MakerDAO and DAI, are all crypto assets, but they are now going to be taking in all these real world assets. So that's like all your gold, your silver, your property, and that's a much bigger market than the crypto asset as a whole. So it's good for DAI and MakerDAO, and because Maker is such a big part of the whole DeFi space, it's a big thing for DeFi as a whole as well.
So some local news. So SC has blocked access to Rebitano. So for any of our community members that are using Rebitano, so maybe you should try to settle your business there, because eventually the Malaysian government will block you from accessing this website. And I know some of my friends do use Rebitano quite a lot. So next is, so SC have gives Bitcoin Cash the green light to be listed in Malaysia. I don't think it's been listed on the famous exchanges yet, but yeah, so do keep in mind that you can now also buy Bitcoin Cash from the approved exchanges in Malaysia. And last but not least, one of the news of a Malaysian founded startup or company, you would say. So this one is about a crypto social media platform that has raised $1 million in funding in trying to create like a sort of social media powered by tokens, which has multi users. I'll post a link for all of the articles later in the chat for you to check it out. I think that's it. So back to you, Maher.
Yeah. So if anyone knows the Torum team, feel free to share what you know. I think I very briefly messaged one of their members on Facebook a long time ago, but to be honest, I haven't really explored too much about their product. So yeah, it's always cool to see more Malaysians in the space. And a quick note on the Uniswap thing that Aiman mentioned just now. The NFT is actually, there is an SVG image right on the token itself. It's in base 64, which you can decode or convert into an SVG, and then you'll be able to see the file. So if for those of you who joined us in the NFT talk from a couple months ago, it doesn't have this sort of vulnerability where the actual image is stored in some potentially centralized website that can go down. It's the image is literally on the token itself. Yeah. So without further ado, we're inviting Ken Chan from Ribbon Finance, and Ken, maybe you can give like a brief introduction. We can go a bit more when we have the fireside chat, but a very brief one before you go into your slides.
Hey everyone, so I'm Ken, the co-founder of Ribbon. So Ribbon is a structured products protocol for DeFi. So previously, before founding Ribbon, I worked at Coinbase as a software engineer. And before that, I was doing research for Zilliqa blockchain. So that is like the background there. So yeah, shall we dive right into the slides?
Yeah, man, let's go.
Let's go. Can you guys see this?
Yep.
You just zoom in a bit. Okay, so how do I go full screen? 1 second.
You can click on present. Yeah.
Okay, all right. So today we're going to talk about Ribbon Finance. We are basically creating crypto-focused structured products. So we'll talk a bit about what structured products are later on. But first, I want to walk you through what are yields in crypto first. So when people first join crypto, the common question or the common theme is that it's a scam because obviously look at the APY, it's 155% per year. So obviously it's a Ponzi scheme. So obviously looking at these numbers, we know that crypto has high yields. And these numbers here are from Badger Finance. So first we have to understand why these high yields exist in the first place. So there are three broad categories where these yields come from. So first is the demand for leverage. So when a trader wants to make a margin trade, leverage trade, they would basically borrow crypto assets and invest into the market. So there is a very huge demand for this. So this is what's driving a lot of stablecoin APYs, the yields on stablecoins, because people are borrowing stablecoins to essentially buy these crypto assets like Bitcoin and Ethereum. So that's what drives a lot of value there. Then the next is providing a service. So this is providing liquidity on Uniswap, for example, or it could be staking on LivePeer, for example. So anytime you provide a service, you get a return back at you. So, and the final one is slightly more controversial, but relatively new. It's with equity-like tokens or governance tokens, where, for example, you would have compound tokens that gives you rights to governance in the system for major upgrades. Right. On top of these yields, what happens is that in DeFi, what we have right now is yields on yields. So for example, you would lend assets on Compound to earn comp. They are native token. And if you LP on SushiSwap, you'll earn sushi as well. So you can see that you are earning yield on both lending and also their equity tokens. So is this a Ponzi scheme? No, I argue no, because essentially they are rewarding you to participate in the system and you get to have a say on what the system decides on. So I wouldn't relegate it to that. But what's more controversial here is you sort of have these Ponzi-nomics games in Uniswap or SushiSwap where it's like 155% a year return on yield. And you can see the tooltip there. It says 80% of it comes from DIG rewards itself. So a large chunk of that reward is, a large chunk of that reward actually comes from LPing DIG and earning DIG on top of it. So it's a bit like Ponzi-nomics where it's like, oh, I have to buy DIG token to LP DIG to earn DIG. So it's very recursive and there is this Ponzi-nomics like dynamic to it. So the argument here is that it's not really sustainable at all. So we see this breaking in a few protocols. This is Hedgic, for example. So this core dev of Hedgic recently created this blog post saying that, oh, we need to rebuild our incentives program. We've been paying out to people too many Hedgic tokens. That's why the Hedgic price has been going down a lot. So the quote here is, we cannot spend our ammo in the first 2 years. I thought that was really interesting because governance tokens are essentially incentives for people to use the network in the first place. And they are scarce. So you have to use them very cognizantly. So Ribbon here is sort of trying to create this new path or new category of yields. So we are trying to explore how we can create yields from exchanging risks. So this isn't really a new concept at all. It might sound like we are inventing something completely new, but no. But in TradFi, this has been done a lot already. And this is normally done with the help of derivatives and options. So what is the opportunity size here for Ribbon? So structured products are pretty well known. Sorry, 1 second. Let me just off my phone. Yeah, okay. So yeah, structured products are quite a huge thing globally, $7 trillion market. It's fairly highly regulated. So it's normally these investment banks that are creating these products for large asset management firms, hedge funds, and then it's sold that way. So we think that it's pretty ripe for disruption here. So, and here we also see that there is a lot of new derivative products that are coming up every day. So we have a lot of options protocols to choose from. You have Open, you have Hedgic, for example. So a lot of these popping up every day. How can we compose these things into user-friendly products in the first place? Because options are really hard to use. And then the 4 circles at the bottom there are the broad categories that structured products are tackling. So volatility, yield enhancement, principal protection, accumulation. So right now we are mostly focused on yield enhancement. Prior to this, we launched the first multi-protocol strangle option. What that means is that it's a combination of a put option and a call option. So you would buy these things in a bundle, and then we manage the position for you. So we recently moved away from this direction to creating an options vault. What this is that users deposit assets into the Theta Vault, and on a weekly basis, it would create call options that it would sell off to market makers. So on a weekly basis, run these strategies. Right, so the option strategy that we are running is the covered call strategy. Very simply put, it on a weekly basis would say, okay, let's bet on Bitcoin and say that if Bitcoin is more than 64,000 this week, we lose money. But if it stays below 54,000, we make money for free. So that is a huge driver of yields there. So you're essentially capping your upside in return for yields. Okay, this is an example of a recent trade for the WBTC Theta Vault. So we are short call at 64,000. So if Bitcoin goes up above 64,000 this week, we lose money. If it stays below, we make money. So you see those 2 lines there, sold contracts. Those are essentially the vault's revenues. So this is sort of what our roadmap would look like. It's a universe of options vault. So we started with ETH covered call vaults, WBTC covered call vaults, and we are going to move on to put selling vaults, which essentially let users bet that it won't go below a certain price. So for example, the vault would bet that Bitcoin will not go below 45,000. It'll make that bet on a weekly basis. That's what a put selling strategy is. So moving forward, we want to explore things like user-generated strategies as well. Cool, thanks. That's pretty much it. So let me read the comments actually. Let's see.
No real questions there.
Okay, all right. So, yep. Okay,
cool.
I think I can walk through the site to demo for you guys how it looks like. So this is what it looks like for the Kovan site. Here you can see the projected APY for BTC and ETH. So let's select ETH. So it is basically showing that it has been losing money because ETH has been pumping too hard. So that is so this is a crucial part here. It's not like some weird scheme where it's guaranteed money, you are taking on some risk here. So these are the activities that I mentioned before. We bet that Ether will stay below 1840, for example, and then we sold these contracts. So here, it's pretty straightforward. What you can do is you can deposit some Ether into Vault, get a deposit preview. And then you're in. Yep, so deposit successful, then you can see that your position has been up to date. Right here, pretty rich on Coven. So here you can actually see your balances, what vaults that you're in, and the past transactions. Yeah, this is essentially it. We plan to launch a lot of these vaults, which allows users to deposit and make money on each side of the market, whether you're betting on whether you're betting on the upside or downside. We allow users to pick whichever sides they want to be on and earn yield for that. Thank you.
Right. Thanks, Ken. There's a bunch of questions now after you mentioned questions, but I think before we get into sort of questions from everyone, I like to always get people to kind of give their story a bit more before we get into the details, so we get to know you a little bit more. So do you mind like just sharing your kind of your backstory into how you your adventure into crypto, like how you entered the space, and then up to Coinbase, and then founding Ribbon Finance? Like, what's Ken's story?
Yep. So I was always interested in programming. Started programming since I was 16, 17. Was mostly focused on the tech startup scene before that. So was working on like SaaS startups before. So I think in 2017, I was introduced to crypto by a friend of mine. So we dove really deep into crypto. But then at that point in time, we didn't really have any ideas on what to work on or what to build. So we just explored the space a lot until maybe in 2019, I joined Coinbase. And in Coinbase, it was fun. You make good money, obviously, like they are paid well, and you work on fun projects. But I felt that it wasn't really for me, wanted to work on startups. So I thought that Ribbon was a really good fit for that.
Okay, I think on topic, Nicholas asks, what was it like working in Coinbase? Like, are you able to share a little bit more detail?
Yeah, Coinbase is pretty fun. So they move quite nimbly. So it really, the experience there differs a lot team by team. So if you're working on a crypto team, for example, you would be working like really deep crypto native stuff. You would work on blockchain integrations. That's like the fun team to be on. Whereas like if you're working on like the institutional side of things, which is what I did, you're just working with like web APIs, all that really boring stuff that's been done and you're tired of it.
Okay, and I don't know if you mind sharing like what was your sort of like.
But it was quite fun for me.
Yeah, cool. What was your like kind of co-curricular activities, if any, that you did that led you to this like aha moment of coming out with Ribbon Finance?
Co-curricular activities. So in Coinbase, what I did was a lot of MEV stuff. So I did a lot of botting as well. So I wrote stuff like liquidation bots, front-running bots. So from there, wanted to work on something more sustainable, something more long-term. So yeah, we, my co-founder and I, we basically were exploring the space and thought that this was a good fit. like looking into the past, porting over things from TradFi normally works quite well, and we felt that structured products are quite underexplored.
Okay. Cool. Yeah, I guess while we're on the topic of the backstory, Adura asked, what was your education background?
I studied computer science in Sunway.
So, do you know if like Sunway kind of students or alumni have been like exploring crypto more? Would you be able to know that?
I don't think anything's really driven from the top, so it's mostly like bottom up. And there are no clubs for blockchain, for example. But actually, I feel like Sunway has a lot of good crypto alumni. Like examples are like Darren Lau. They are like huge in the crypto space, if you guys know them. So who else? There are a few that I cannot think of, but they are in the crypto space.
Okay, and Lawrence asked you to share your LinkedIn for people to stalk you. But I guess that can be later.
Yeah, it's just like Ken Chan GH if you want. Just spell out my full name.
Yeah, I'll get Ken to share his links, like relevant links later. Yep. So if anyone wants to be one of Ken's girlfriends, they can look out for that.
Don't worry, I already have a lot of calls just now, right? That's what someone mentioned.
Yeah. Okay. So I think I'll just start from the top now. For questions. WinSQ asks if there are any plans that Ribbon has for the multi-chain sort of reality.
Yeah, multi-chain is hard because we essentially compose with these options and derivatives protocols. So they have to be live on a certain chain before we use them. So you can imagine we are sort of like Yearn. So Yearn uses protocols like Curve, Uniswap to actually yield farm. So Yearn actually needs these protocols to exist in the first place. So Uniswap and SushiSwaps, those are really low-hanging fruits that will be deployed. But like for things like options and derivatives, that actually really needs some time before they are live on like BSC or Solana, for example. So will be a while until we do that.
Yeah, and on that topic, right? So, as I understand it, there is some similarity between Yearn and Ribbon in the sense that like a lot of people use things like Curve and Yearn because you save on costs, right? Like you don't have to make all these like transactions many times. Is that similar with Ribbon in the sense that you bulk transact?
I think there are some similarities, but I would just put it at like, okay, we are vaults and then we are doing things in a pooled manner and we are composing these different protocols, but that's basically it. How Yearn generates yields are quite different.
Okay, which actually brings me to a good point. Also, I guess related to a question that will be coming right after this is, so how does Ribbon Finance make money as a platform?
Right now, we don't make any money, but what would happen is that right now we actually do charge a withdrawal fee, and that withdrawal fee just goes to protocol and we don't really do anything with it. So in the future, when governance tokens are online, people can govern where the treasury goes to. So do things like performance fees, management fees, sort of like how Yearn is. So fees are the way to go for Ribbon as well.
Okay, so I think that answers the question already from Jaylee2215. Why didn't you integrate a token for the project? So I guess the question would be, why haven't you integrated a token?
Yeah, I think we want to prove product market fit first, because a token is sort of like Pandora's box, where it's like once it's released, you have to maintain it. People will bitch about how the price is going down all the time, so you cannot focus on the actual product. So just want to focus on getting high yields for people first before integrating a token.
Okay, so does that mean like we should use a Ribbon just for that airdrop potential?
I wouldn't say anything to that.
Okay. Okay, cool. So Ash asks, what's the minimum ETH you recommend to deposit in the vault?
Oh, there are no minimums at all. You can put in however much you want. But obviously, your deposits have to justify the gas price you use. So it costs like $20 to $30 to deposit into Ribbon. So you best be depositing more than $30.
For sure. And maybe this is also a good time to ask about what your strategies are with regards to creating new vaults or like increasing the ceiling to your current vault.
Yep. So a few considerations. We are going to be focused on the two big assets first. So ETH, WBTC. So nailing down the basic strategies like call selling, put selling first, that is fundamental. And we're going to be focusing on that the next 2 to 3 months. Beyond that, I think we would be exploring things like a uni vault, for example, the uni tokens or com vaults. Because if you look at compound finance right now, you can see that uni's APYs are like sub 1%. So there is zero borrow demand for uni. So essentially having uni theta vaults would create this alternative yield market for uni. So that is quite crucial, I think. And then raising the ceiling, that is mostly dependent on how high it would get. So we basically see how much FOMO there is, and then we just raise like a certain amount that we judge to be that will be filled to capacity. So yeah, we will increase it incrementally.
Okay. I imagine it was related to like making sure the product is relatively small, so you can see if any issues you can handle them before you just explode and go big.
Yeah, at this point, the first 4 weeks we have already gone through a few audits, so I feel quite safe to increase the cap by a huge margin, because previously it's pretty incremental, right? Like from 1 million to 5 million, for example. It's because we needed more confidence and audits, but right now we have them, and we'll continually increase it.
And so you mentioned uni, right? So have you guys had any kind of like process for like figuring out which tokens you want to have added to the platform after the first two, or is that something that maybe you let governance decide in the future? Do you have any thoughts on how you want to add more tokens?
Yeah, the uni idea is because uni is basically the largest ERC20 market cap, so it's the easiest to lean into. As for methodology, we don't really have a plan around that yet, but we'll keep you guys updated on that. Yeah.
Okay. Ayman asks, what derivative or option protocol does Ribbon use for your vault?
Yeah, we just use Open. So we use Open to create these option tokens, which essentially represents a single option contract. When you buy an O token, it gives you one call O token, for example.
So you're not using hedging?
Yeah, we were using hedging for the Strangles product. That was our first iteration. So, but for Theta Vaults itself, it's just Open.
Okay. Is there like a particular reason why one or the other for different products?
Yeah, right now there isn't a good way to sell hedging options. In hedging, how it works is that you basically deposit your ETH into the hedging pool, and then whenever someone wants to buy an option, they'll buy from the pool. Sorry, not buy from the pool. They would deposit their premiums into the pool, and then say, okay, if ETH hits 4,000, I get paid out. So the pool will basically accommodate every single price out there, and will take like the worst we'll take like the worst risk there, and they'll get wrecked all the time. Whereas like Theta Vaults, we are just focused on getting one single strike price.
Okay. But in future you might have some products that would make sense to use hedging, right?
Yep. So products that are mostly focused on buying options, because right now Theta Vaults is just selling options. Hedging makes the most sense for buying options.
Okay. And so I related to this, WinSQ asks if you have any plans for exploring other options protocols, for example, Siren and Octus.
I think these protocols are pretty hard to integrate because Siren, for example, is very focused on niche shitcoin options. So like sushi, no offense to sushi, but yeah, so their ETH and BTC options market isn't really that great. So rather just default to hedging at this point.
Okay, so if any at a time in the future when you want to expand your sort of token tokens that you provide, then maybe you might explore these more altcoin friendly protocols. Okay, Caleb asks, which I think is kind of a financial advice question, but the question is, how do we use calls and puts to hedge our portfolio?
I think I is breaking up, right?
Yeah, it's not only me, right? Arif.
Oh,
Yeah, it is
crap.
Arif.
Sorry about that. Can you guys hear me now?
Maybe you want to try turning off your.
Can you guys hear me now?
What is that?
Arif.
Testing. Hey Ken, can you hear me?
Better, yeah.
Yes.
Okay, cool. Yeah, I'm gonna turn off my face now. So Caleb's question was, how do we use calls and puts to hedge our portfolios?
What was the question?
Oh, sorry. Caleb asks, how do we use calls and puts to hedge our portfolio?
Oh, okay. Hedging is mostly by using puts. So you buy puts at a really bad, like a really low strike price. So if it goes below that, you essentially be safe for anything below that. So for calls, what it does is that you can buy really out the money calls. What that will do is that in the event that it pumps really hard, you make a lot of money, because how options work is that you pay a very small premium to buy these options to buy at that price. So that is a lot of money to be made if it pumps that hard.
Okay, so basically limited downside, unlimited upside, essentially.
Correct, yeah.
And I think you guys even created a meme from the Big Short, right? Of basically the guy who is selling all these options products and making a lot of money eating sushi. That's what Ribbon's role is in DeFi. Is that a correct way of describing it? Okay, but you do realize that guy's like wasn't
just a meme, but
yeah. Okay. Diaz asks. Hello. Hi, testing.
Hello. Yeah, you're breaking off.
Okay, now works.
Hello.
Better. Okay.
Hey.
Okay. Diaz asks when token and when cap. I think you already answered the first question. When cap, I guess when the vault cap is removed unlimited.
No, I think he's referring to our cap meme. So if you
Oh,
go to Discord, Ribbon's Discord right now, you can see a bunch of people wearing the ribbon cap. And then, so it's a bit of a meme created by community saying that they want the actual physical cap, ribbon cap, and that it's more valuable than the tokens itself. So soon actually we are doing like sample testing on the physical cap. So we'll send it out to people.
will we see a cap token the way there is a socks token?
Maybe, possibility.
Okay, Thomas asks, let me see, Ken, I've heard many protocols discuss the issue that they do not have a sustainable yield and revenue mechanism when emissions don't make sense. This is some of their main pain points. What's your solution for this?
Oh, you're breaking off.
Ah, crap. Sorry, guys.
But it's okay. I saw the question, so let me just read it. So I have heard many protocols discuss the issue that they do not have a sustainable yield. So emissions don't make sense anymore, and that's a pain point. Do you see a solution for this? So in short, Wi-Fi has sort of seen this problem as well. So they have some emission of Wi-Fi, and then because it's scarce, they have to resort to minting it. So obviously, if you just have continuously, if you're continuously minting your tokens don't really make that much sense financially to hold. So I don't see a good way around this. I think what's cool is that Sushi, for example, makes sense as a token to hold because these are actual revenues generated by trading. So I think Sushi, for example, is a decent token. Whereas for Compound, I don't know how it will work because holding Comp doesn't entitle you to any cash flows, for example. So it's going to be a valueless token for now.
Yeah, maybe you can use it on the new chain and pay for gas there.
Yeah. Someone said I need to say not financial advice. Don't buy Sushi.
You can farm Sushi. So Ayman asks if you have bots doing trades or traders deciding the options to enter.
Yeah, right now it's pretty manual. So what it does is that on a weekly basis, we will we will use the vault's funds, 90% of it to mint these option tokens. And then we work with market makers to sell these option tokens. We want to move forward to decentralize it is to have some sort of auction system. So anybody can bid on these option tokens and then buy them.
Okay. So you mentioned you use open and you use hedging, right? So you're essentially one layer on top of some of these DeFi Legos. Does that is there any difference for you to be a product that is one layer above? Like, because there is this reliance on the underlying protocols, like for example, if they get hacked or they make upgrades, like, is there a difference between doing a DeFi project at this layer versus the layer below?
Yeah, there is definitely a lot more protocol risk where we depend a lot and there are no upgrades for security. We are screwed. Yeah, that's basically it. We just have to live with that.
And I guess what would be the way around it, or like the ways you can mitigate that risk?
And working on it ourselves, but that isn't a great option.
Okay. Let me see. So Sam is asking or actually a question as a Sunway alumni. Without knowledge in coding or finance, how can he progress his crypto knowledge?
Yeah, Ken, I think Harry mentioned the question about from Sam.
Okay. Oh yeah. So as a Sunway alumni without knowledge in coding, how will I progress my crypto knowledge? So really controversial, but I'll just say actually try coding. A lot of resources out there. If need be, go for a coding bootcamp. I think that's the highest leverage thing you can do. Know that it's really hard, but I think if you really work through it, it's really great. Or it, and I wouldn't say coding is the only one. Like just diving deep into finance is also a huge leverage as well. So try your hands at trading. Yeah, think it would be really good.
Thanks, Ken. So yeah, I'm helping Harif out here. So the next question is actually from me. How do you, because you've been in this space for a while, right? How do you find or discover product market fit in an industry where everything is like decentralized?
Yeah, a lot of the community and the people that we've talked to is mostly from Twitter. So having a Twitter reach was actually really good for us. Like co-founder has like 5,000 followers. It's not much, but like it helps us reach a lot of people and talk to them. So that is what bootstrapped our Discord community. As for like product market fit, I don't think I can answer that before actually achieving it. So we've seen like basic signs of it, but I wouldn't say that we've hit product market fit.
Thanks. Like, do you see that in the future, say that Ribbon Finance choose the route in issuing governance token, for example? Do you think that its governance is a suitable route for a product like yours? Because not everyone knows how to trade, right?
Yeah, not everyone knows how to trade. So I think what could work is like you delegate your vote to someone who would manage the vault. So it has to be someone reputable. You have to trust them based on their reputation.
If anyone have any question, you guys can drop in the chat and pass it on. So yeah, so there is follow-up question from Sam. So Sam, how do you gauge fundamentals of shitcoins and determine which to invest? Oh, this sound like a strictly like a financial advice. So maybe maybe you can share what's your usual process in evaluating a project, evaluating a token economic, like does it make sense to hold? So maybe you can share a little bit about your thought process in evaluating.
Honestly, I'm not so much of a shitcoin trader, but I'm pretty conservative. Like I hold Bitcoin, Ether, basically like the blue chips at this point. So have really tiny holdings in like other crypto tokens. So don't have good advice there. I'm like a boomer in terms of a crypto where I don't really farm that much in the first place.
Okay. Next question is from our host, Harif. One difference with TradFi is that derivatives are typically over collateralized in DeFi. Do you have any thoughts on this difference?
Yeah, so over collateralization is actually fine for options. For example, you put in 100 ETH, you mint 100 option tokens. That is fine. That just means you're not over leveraged and selling call options, which are horrible. So these risk parameters are okay in crypto derivatives, but not so much for lending. Like you would want to have as much capital efficiency as you can for lending.
Right. Thanks, Ken. So I think Harif has a follow-up question. Another source of yield that is sometimes mentioned are third world users getting access to financial services. So do you think this is real or just virtue signaling?
don't really understand the question. Like, are we getting yields from third world users?
Yeah, so Hari, maybe you can clarify the question in the chat.
Okay, I don't know if you guys can hear me.
Yeah, can hear you now.
Okay.
For
I'm
now.
just gonna try and say this while I'm not cut off. So like basically what is often said is that people in say Venezuela or Argentina or Korea are able to get access to financial services such as loans or options where they would get it very difficult in a difficult way in their own traditional financial services with their own national banks and so on. Do you know if there are these kinds of people that are actually like using the DeFi products in this way, or is it more of just kind of like nice stories that we like to tell each other?
I I think this is controversial, but like I think it's probably the latter. Right now in Ethereum, it's mostly people that have at least like $50,000 to their name and are using the chain because you need $50 to transact in the first place. So obviously there's a very obvious minimum threshold that you need to have in the first place to use this product. So think BSC is probably the chain for them. So which is why it's getting more popular than Ethereum right now, rightfully so.
Right. Next question is from Sam. Is the Ribbon team looking to expand?
Yes, we are looking for Solidity engineers. So if you know Solidity, please come forward. We'd love to talk to you.
What's the experience level that you guys are looking at?
What? Sorry?
What's the experience level for the Solidity engineers that you guys are looking at?
Just 1 to 2 years, yeah. Like someone senior, preferably.
Thanks, Ken. The next question is from Aaron. Do you see yourself deploying an application-specific change on, let's say, Parity substrate?
Yeah, just to rehash what I mentioned before, we actually need to compose with these different derivative and options protocols. So need them to exist in the first place before creating like an app chain.
Thanks, Ken. So next question is from Johnson. Is gas fee a concern for designing Ribbon Finance?
Yeah, that's like top of mind because right now we are aiming to have as low as possible for the gas fees. And right now it's lower than Uniswap transaction, which is why we are pretty proud of it. Yeah, that's like top of mind for us.
A follow-up question on that, right? Would you say a gas fee when interacting with your contract would be a comparative advantage compared to other products if you can make it lower, or do you think people will just ignore that?
I think there's a cut-off point where it's like, oh, if it's above 50, I won't ever transact with the protocol. So I think anything below 50 is like, oh, it's decent, I'll use it. So I think there's a clear cut-off point.
Great. Another question from our host Harif. Other than speculating or gambling, is there a practical reason to buy an option? For example, AirAsia would buy derivatives to hedge the fuel prices. So maybe, if possible, maybe you can include some example how one could use this in DeFi as well.
Yeah, the AirAsia example is quite good. So I think what they would use is a futures product, but options aren't really applicable, I think. I think, for example, commodities people, they would want to buy puts so that when the price of commodity they are selling is nosediving, they are at least protected. So there is some hedging there. So that is one use case of options. But right now, obviously, crypto options are people speculating and trading. So it's mostly a tool for speculation at this point. But I guess miners can actually use, miners are huge users of covered calls now that I think of it. So they want to essentially have some yield on their Bitcoin. they don't need so much upside in the first place. Yeah, so miners use covered calls a lot.
Okay, I see. Do you have any personal interest to see which DeFi verticals to grow? For example, insurance, prediction markets, other than derivatives that you can see there's a lot of potential in the next few years or probably even months.
Yeah, I continue to be a lot more bullish about derivatives because looking at TradFi, looking at crypto markets right now, derivatives have traditionally been larger than the actual spot market. So think the perpetual protocols, the derivative dexes, they will actually get quite large and hopefully larger than Uniswap, which is very hard to imagine right now, but it's fairly possible in my mind. So there is a lot of room for growth there. And then I don't know, as like a DeFi thing, insurance doesn't really work in my mind. So what else? What other areas are there? Yeah.
I mean, there's plain old lending.
Yeah. Lending is pretty cool.
Maybe like
But
new kinds of decentralized exchanges, or just other things. Maybe not even a specific field, but like kind of niche ideas that you've heard of that you find personally interested in, which may not be what you're working on with Ribbon.
I really like the NFT stuff. So I have mostly been speculating on them, but I see a huge reason for people to collect them in the first place. So things like hash mask, I really like that one, like the art and everything. So, and yeah, just NFTs in general, I think I'm quite bullish.
Maybe another way of asking, or a related question to ask is, do you see like other platforms, other kinds of products that if were built out very well would help Ribbon in delivering your services? Like a new Lego to build on.
Yeah, so one Lego that we have been considering and thinking about is perpetual protocols. So not referring to perpetual protocol itself, but perpetual swaps. So if you have perpetual swaps, that basically unlocks a new stream of yields for you. So right now, if you go to Binance, you would have to, when you open a perpetual position, you have to pay something called a funding rate. So the funding rate is what creates this perpetual contract itself. So that is a huge source of yield, and traders use that to create a lot of yield. So if you basically move that on chain and have that on chain, you can harvest that yield. So that is like a potential avenue.
Okay. And let me see. Bill asks what you think is your economic moat compared to competitors. Or actually, do you have competitors? I guess is another question to ask.
No, I think I still maintain like the position that structured products are still quite underexplored. But I think right now our code is open, anybody can copy it. But I think our moat here is that we actually have connections to market makers and our liquidity there. So we can get the best prices, we can get the highest yields for Theta Vault users.
Okay. Do you see like someone forking that code, running it on BSC, and then just because it's cheap, they get to, flippin Ribbon Finance?
It's possible, but they also have to fork open. So good luck to them doing that.
Okay. And make sure when they fork, they don't do it wrongly and have it hacked like a couple other platforms have been.
Mhm.
Okay. Let's see. Win asks, what about fixed interest rate protocols? Have you heard of them? Do you have any thoughts?
Yeah, I think they're pretty cool. So like Element, for example, wait, is Win SQ Windra?
Now that you mention it, yeah, I'm guessing that's the case.
Maybe, yeah. So Element is pretty cool. Yield is also pretty cool. Uh, yeah, 88 MPH is also pretty cool. But I personally have not used any of them. So can't really speak towards my personal experience, but I think they're solving a quite core problem. Yeah.
Okay, there's Pendle as well.
Yeah, they've
Oh.
recently did like an LBP or something.
Okay. So earlier in the monthly roundup, Aiman mentioned this real world assets by MakerDAO, right? Do you see that impacting the derivatives market, that there are these real world assets that potentially could be collateralized or could be used in other ways?
You know, I'm sort of in the camp where if it's not digital, it doesn't really fit on the blockchain. So I'm in that camp. Whereas like the MakerDAO people, obviously they're pursuing the whole path of like, let's lock up your house as a collateral and then mint die with that. But I don't know. I don't really buy it because there are no guarantees of that happening on the blockchain. You cannot guarantee that you're not selling off your house to someone else, for example.
Yeah.
Or the transaction is complete.
So would you say Ribbon will not use these as, at any part of the platform, any of these real world assets?
No, we are focused on crypto assets.
Okay. Wow, that's a strong statement to make. Yeah. Okay. So kind of related are the fact that, the rumor out there is that institutions are coming in. They've seen that Ethereum's at least right now is giving potentially higher return than Bitcoin, and the rumor is they're all just like accumulating before they'll announce like 1 or 2 months later that they have like billions of worth. What's your take on them joining the crypto space in general, and then after that, how would that impact Ribbon Finance in what you guys are doing?
Institutions, I think they are just warming up on things like futures and like crypto options. So don't think they will be exploring DeFi anytime soon. So what would happen, I think, is a CeFi exchange would integrate DeFi capabilities. You've seen that with Binance, for example, or Coinbase in some instances. They would basically access DeFi through a CeFi exchange. So one hop there. So don't see them doing that anytime soon. Will take a while. But there have been instances of some firms doing like covered call options for miners quite successfully. Like they're doing billions in volume per year, that kind of thing. But they haven't really been public with all that.
Could you expand a bit more about how miners are using covered calls? Why is it such a in demand for them?
Yeah, so what they would do is that covered calls are basically saying, if Bitcoin goes above this price, I'll just sell it anyway. And miners are okay with that risk. Like they don't really care if Bitcoin pumps to like 70K. They're okay with selling it at 60K, for example. So they want the extra yield on top of their Bitcoin and possibly selling off some of their Bitcoin if needed for USD. So that is used to fund their actual operations.
Okay.
It's like
Sorry, go ahead.
It's like a good fit for their mining operations that way.
Yeah, because basically it's kind of like the AirAsia thing where it helps them plan out their kind of revenues versus costs better. Do you see this happening in Ethereum, especially with the merge happening soon? Like, is there demand from Ethereum miners?
Yeah, I don't see why not. Sure. Yeah, even validators would probably use something like that.
Okay, that's something I haven't thought about before. Well, actually, but if it's validators, then it's probably something that Ribbon Finance can directly do, right? Because it's all on chain. There's no off-chain element to.
Yeah, we've been thinking of just using STETH, if anybody knows about it. So STETH is like this token that's issued by Lido Finance, which represents a claim on your ETH that is staked into the ETH2 system. So if we use that for collateral, that will basically mean that you are both staking ETH and earning interest on it and writing covered calls. So it's like a combo product that would be quite interesting for people.
Oh, nice. Okay, so I feel like I want to go back to what you mentioned with like front running, running bots and things like that, right? Like maybe away from Ribbon Finance for a short while, but I'm personally very curious how it works, like to run these PGA or priority gas auction bots or front running bots. I'm sure at least some of the community members are as well, especially with the interest in MEV recently. So like, would you be able to share like how that kind of life works, like how you search for opportunities, how you at least back when you were doing it, like sort of risks that you had to take into account, and just the day-to-day life of a front runner.
Yep. So to give you more color on that, I was basically doing liquidations on DYDX. So how DYDX works is they have this margin system where you basically need to collateralize your position. And then, for example, you would collateralize your position with ETH and then borrow USDC to buy more ETH. So if the collateralization of your ETH is down by, let's say, 10%, you get liquidated. So what we do is we have bots that are looking at the mempool all the time to see whether someone is actually initiating a liquidation on a particular account. What we do then is that we replace that transaction with a higher gas price so that we end up higher in the block than them. So our liquidation will get executed, but theirs will fail because the account has been liquidated. So that is like what front running is. So we mostly rely on what we call primary liquidators, which look at these opportunities, scan for these liquidation opportunities, and we just front run them. So that is what we do for front running.
So how do you?
Yeah.
Sorry, I think I'll let you finish first.
No, I don't have anything to say. Go on.
I was gonna say, like, how do you look for these liquidations? Like, how do you know they are happening? Like, do you run like a kind of like a bot that monitors the pending transaction pool, or how does that work?
Yeah, we just watch the mempool and then front run them. So they basically will call a function, and then we just look at like the function signature to see if it matches a liquidation.
Okay, so there's some. Would it be correct to say that there's some sort of guessing that you putting in there with like maybe some parameters that you have to kind of just bet on, or is it super clear?
Yeah, sometimes it's quite hard because they sometimes use like some custom contract to do liquidation. So that's something you have to figure out as well. It's a bit murky sometimes where it's like you see liquidations happening before you because they have like a special way of doing liquidations. It's every single liquidator that you're trying to front run, it's almost a mystery by itself. You have to figure out, for example, how they encrypt their liquidation into the transaction. Like had really fun days trying to figure out how they hide their liquidations.
Yeah, and there's also probably at least like a dozen other people that's doing the same thing that you're doing, right? That you're competing with.
Yeah, I've been front run by a front runner as well.
Okay, and like so this, I think, relatively recently. I don't know if it happened back in the day, but like recently we hear stories about how like there are these bait or like trap kind of traps set for front runners where like you front run and then like the funds kind of like get immediately taken from you, or there's some poison involved. Did you have any kind of experience with those kinds of things?
No, those developments are actually quite new. Like when I did front running, it's like 2020, and there's so many things happening right now in the MEV space that are quite new.
Yeah, it's like a decade ago.
Yeah.
So Iman's asking, so can you elaborate what happens when a liquidation executes? Is there a market for these liquidated assets to be auctioned? How does that work?
Yeah. So when I say liquidation, it's mostly the liquidator paying down the account's debt. So using DYDX as an example, what will happen is that they have a ETH debt that they have to pay down. So we would pay ETH and earn some percentage on the USDC. That's an example. So there is no auctioning here. I think that refers mostly to Maker, but most of these liquidation systems, they are in the similar concept where it's like you pay down the ETH, you earn some USDC back in return. So Compound is the same. Aave is also the same.
And so now that we have a lot of different blockchains out there, whether different L1s or different L2s, do you see like new experiments or new methods that could be used for arbitraging between different blockchains, or even MEV between different blockchains?
I think MEV would be quite hard between blockchains because you need to have some confirmation times between each. So don't think it's that possible, but within the L2 chain, it's fairly possible to do so. Can do that on Optimism. You can really do that on Phantom, for example. Yeah.
And so on the arbitrage part, do you see that kind of market growing? Like, is there any opportunities for anyone here who might be interested to to leverage on that?
Oh, it's very competitive. Like, be prepared to lose money.
Yeah. But like there would be some front running involved, right? Because I imagine, let's say PancakeSwap's price is kind of a certain price, and then Uniswap is, let's say, lower, and like for you to arbitrage the difference between Uniswap and Pancake, there would still be kind of front running or that you have to be concerned about. But like you say, it's still within the Ethereum blockchain.
Yeah.
Okay.
So how you would close the arbitrage there is you deposit your asset into Binance, you have them convert between BSC and ERC20, right? So that whole process itself will just take so much time. So not sure if that sort of arbitrage is worth it.
Yeah, unless you hold balances on both sides and then you kind of execute immediately. Yeah. Okay, cool. Okay, I just noticed there are some questions above. It's not related to front running, and we should ask that because this might be related for Ribbon Finance as well. Win SQ asks your thoughts on Alchemix.
Alchemix is a good coin. No, I think it's a very interesting concept, like self-paying loans. Essentially having your collateral as an interest-bearing asset in the first place, you can earn back your loan. Of course, you have to wait like 2 years, but yeah, you can earn back your loan. So in the vein of that idea, like what would be cool is like self-paying call options as well. So if you have your collateral for the vault as like Yearn, as a Yearn vault token, you can essentially pay back your premiums that you paid for buying an option. So I think we are going to keep exploring this idea of paying for things with interest. And I think the Alchemix idea is super cool.
I feel like it gets a bit convoluted though. Like you earn interest, you pay back on some other interest, and there might be like some inception of interest there. Yeah, I don't know how that would pan out.
Yeah, it's very recursive. Yeah.
Yes, recursive is the right word.
You cannot refer to the same asset. If not, it's just like circular.
Yeah. Well, the thing is, even if you refer to different assets, then it can still be kind of circular because they refer to each other, kind of. Um, at least at a very high level, what I'm imagining that it might happen. I guess related to all this is like recently we've heard about people that want to do like credit scores on the blockchain. So for example, like your history with a certain, let's say, lending platform or with a certain robo advisor kind of lets you build up a certain credit score. Have you heard about these things, and like have you thought about how that could be relevant to Ribbon?
No, I don't think it's relevant at all. Like we accept everyone's money. They're like this. I like how Jörn puts it. They are like the Swiss bank. Like Ribbon is a Swiss bank. We will just accept money from anywhere, not financial advice.
Okay. Well, but any general thoughts then on having a credit score? Like is it a kind of an intrusion into your privacy or identity, or is that something cool? Like, what's your take?
I think it's cool. It's sort of like building an anonymous identity online. It's like running a Twitter anon account. And people basically look at your track record and say, okay, I'll offer you this loan or I'll offer you this trade based on your reputation. And we've seen like the beginning of that with like Zapper dashboards where you're just flexing your NFTs and the loans that you've done. So I think we're just going to keep going further into that direction.
Okay. Okay, this one might be a bit more of a stretch. I want to see what your take is on this. What about using NFTs as part of a credit score or as directly as collateral for a loan?
I don't see how it will work, but I think there is a niche market for people doing that. I think, what's that called? I think it's this company started by Alex also, Alex Massmatch that you mentioned just now. I think it's called Rocket NFTs, where it's like you can use your NFT as a loan, but he started it probably too early. There weren't any NFTs at that point. So could work for like niche markets.
Yeah, personally, I don't see it myself, but yeah, he did it before the bull run, like the huge bubble in NFTs. So yeah, probably if he did it a few months later, that would probably work better. Okay, I think we're coming up to the last 10 minutes. There's a couple questions here. I want to make sure we do go through. YOLO asks, and actually, I don't know if you mentioned this, but YOLO's question is, if you consider Uni as a shitcoin, what about Pancake in BSC?
Is Pancake on Ethereum? I mean,
no.
Oh, it's not. So yeah, that would be a bit hard because, like I mentioned, it's very hard to port what we have into a different chain. We need open to exist in the first place. And it takes a while to support new vaults.
Yeah, okay. And Bill asks, what happens to Ribbon during a bear market when yields are being super low?
We are selling both sides. So we are selling downside, we're selling the upside as well. So we think that the yields for writing calls, it'll probably be lower, but it would be more consistent. So like 10%, for example, that sounds like a pretty decent number in a bear market, for example. Like you cannot get that in from Compound by supplying your Bitcoin. So I think there will still be an opportunity there. People will still want to buy options. People will still want to sell options. So the yields will be somewhat consistent.
Okay. See, I lost the questions. Oops. And I was gonna say, and because you don't have any kind of like capital risk involved, right? Like, so you're not like a, let's say like a, like recently we had Robinhood like having all these like liquidity problems because they had to rely on other service providers. Like in DeFi's case, typically everything's over collateralized. So there's no real risk on your team directly, right? Like even if people get liquidated, it's the assets out there that get liquidated.
Yep, we have no risk of liquidations at this point, and yeah, everything is collateralized. In open, it's 100% collateralized. You deposit 1 Ether, you mint 1 O token.
Yeah. Okay. Rajesh asks, I feel like you answered this question already, but Rajesh asks, who would you say are Ribbon's direct competitors? And maybe to add on a little bit would be like, if there aren't any right now, what kind of projects out there do you think might come up? And just because of different directions, different kind of like strategies or principles would naturally come up as a competitor?
Yeah, I think our indirect competitor that's not really in the category of structured products or like financial risk exchange is basically farm and dumps. So Badger, for example, offers 130% on your Bitcoin. So how would we compete with that? That's like really hard to compete. So they are very obvious competitors because yields in this space are people looking for the highest yields all the time. So money will slosh there when times are good and will slosh away when times are bad. So the yield space in general is competing for the highest yields. So we are in direct competition with things like Yearn in that sense.
And I guess would it be correct to say that like someone like Yearn might, like maybe not right now, but might eventually kind of pivot or start a new, another new subsidiary that focuses on just options, and then that would be because they have more capital, like that can be a kind of a competitive threat as well.
Yeah, Yearn, I wouldn't say Yearn is exploring it, but Andre has been exploring like Dairy Swap, for example. Yeah, if you Google Dairy Swap Andre, some results will come up. So I think he's been exploring like using options, using derivatives to do things. But I think Yearn as a product is fairly decent actually. As long as there are new farms and as long as there are new tokens in the market that have these farming schemes, they will exist. And I think that's a good bet to take, but not on like individual farms like Badger or Sushi Swap. Yeah, these farming schemes will stop and then Yearn will move away from them because they are an aggregator.
Yeah. Okay. Ayman asks, what happens when... Sorry, I don't know if maybe you might have answered this already. What happens when a liquidation happens? Is there a market for these liquidated assets to be auctioned?
Oh yeah, I answered this. So
Yeah,
it doesn't,
okay.
Yeah, doesn't get auctioned.
Lawrence asks, which is the best pair to avoid liquidations? I think that's the question.
Best pair to avoid liquidations.
I think
probably like, yeah, lending stables, borrowing stables. There's no way to go wrong with that.
Yeah.
if that's your question.
Yeah. Like, if you're thinking of like Uniswap kind of trading pairs, there's no liquidation really involved, because there's no like lending or things like that. You're just providing a pool of liquidity for people to trade against. Let's see. So Sam is asking, are earnings from any covered calls deposited back into the vault? So I guess the question is it like automatically reinvesting?
Yeah, it's compounded. Yeah, it's reinvested back.
Do you see a scenario or a product without reinvesting? Like, what would be the advantages or disadvantages of that?
I think without compounding, the APYs will be quite low. So don't know why protocols would do that in the first place. Yeah. I don't think that people would do that.
Would there be a guess element involved at all?
Don't think so, because if you're doing it on like a pool or vault basis and not like per transaction, it'll be really cheap on gas anyway.
Okay. And YOLO asks, where is the best place if I want to learn deeper about Bitcoin options?
Yeah, I say Deribit itself, like try trading some with really small size, read their blog posts, they're pretty decent. And then Robinhood also has a few good blog posts on just options, not Bitcoin options. They basically explore like really fundamental stuff about options, the option Greeks, for example. Yeah, they are a really good resource.
Yeah. I guess that's the whole like kind of technical rabbit hole we can go if we ask about all these different Greeks and the different like exotic options and so on. But I guess that probably would be better for a different time. I do want to mention though, for some of the Muslims here, that generally derivatives are not considered Sharia compliant. So just keep that in mind if you want to explore. There is an
You're breaking
argument.
off, Harif.
Sorry, can you hear me now?
Yeah, better.
Okay, I was just going on a mini rant about like derivatives are not Sharia compliant. So if as a Muslim you want to go in, keep that in mind. There is an element of these derivatives are backed by collateral. So that in a way that's different than traditional finance. But yeah, that's something to note. And okay, Adura is asking a question that I was thinking of to ask to close off the conversation. Basically, what would your advice be for someone new, especially if they're not a technical person, to get into the industry?
I think crypto also needs like operations people. So I wouldn't sell yourself short, or like any other skills really, like marketing, operations. Like these are also valuable skills, and like best way to join the industry is to join a startup that's in the space. So yeah, I think just join one of these
Discord.
startups. I think it'll be really exciting and you'll learn a lot.
Yeah, and I think one cool thing about a lot of DeFi projects are like pretty much everyone has a Discord server, so you can kind of just join and start contributing already. Like it's not like you have to apply for a job to contribute. You can just like even create a meme, right? And then the community will like you for it. Sometimes you can get rewarded. Yeah. So yeah, maybe design a cap for Ribbon, and then potentially have your design get printed, and maybe would reward you for that. Yeah. So I think we're here at 9:30, which is when we typically end our meetup. If anyone has any final questions, feel free to put in the chat box. We can probably ask like one last one. But if not, I guess one thing, Ken, is for anyone who's listening, whether live or watching a recording later, how can they participate with Ribbon? How can they kind of join the community? How can they help you grow?
Yeah, so to join Discord, you can go to discord.ribbonfinance. Let me just type that in. And then you can go to ribbon.finance to look and see what's it all about.
What kind of support are you looking for right now? Like someone already asked that whether you're hiring, but maybe from like a community point of view, from a user point of view, like what would you appreciate from the community listening?
Yeah, just try out the product, give feedback wherever possible, and then just create some chatter in Discord. That's like always appreciated.
All right. Okay. Thanks a lot, Ken.